Welcome back to Road Dog Crypto. I have the weekend market watch for you. A lot of confusion about what's going on in the market. Thought I would clarify things a little bit, settle some nerves. As we go into the weekend here where we usually have a lot more volatility, we just need to zoom out, take a look at the charts and know what to expect over the coming days until Wall Street comes back into the market on Monday. Road Dog Crypto. If we zoom just a little closer on the daily, we can take a look and get a better idea about what is going on. We can see that for the past several weeks, we have been forming this pattern. It's been a triangular pattern. If we take it over to the Heikin-Ashi, which is what I like to do, kind of makes patterns a little easier to define. I'm going to take this line and put it right up from candle body close to candle body close. And there we go. I'm going to take this one, get it out of the way. Look at the shape that we have here. This is a falling wedge. And if we track the price action to see what has been going on, establish this pattern after the big capitulation here, after the big cascading sell-off of stop losses that kind of drove us down, we had a quick recovery, got a nice candle body close here about 28.8, which is right at our 2001 bottom. So we traded in this pattern, bounced out of it a few times. The thing to notice, when price action bounces outside of a pattern and then bounces back in, you can often expect a bigger move to the opposite side. So this one bounced out, bounced back in, then it went up. Okay, now we're going to take a quick measure from where it broke out to where it went up. And you can see that we got just a little over 10%. That number is very important. If it's under 10%, let's just make it a general rule. If it's 10% or under that it goes up and then comes back down, it may possibly be a failed pattern. It's always good if it does hit above the 10%. This one did. So what we're anticipating for it to do is do a retest where it will come back down to this area. Around the 28.8 area, we should come back, retest, come back up this way, might have a little hard time here, and then work on breaking up. Please bear in mind that the Ichimoku indicator, which is right over here, is still heavily in the red, is thickening up. It takes a while for price action to work through this. And we're looking about toward the end of June before we get over in this area. Anywhere through here, we can start making our way up. Will it go through? That is yet to be seen. This is a good area to actually get a bounce. The Ichimoku indicator does give us a clue when it starts thinning out over here and starts turning green. That's the sign we're looking for, that we've got some upward action in the future. That's what we're keeping our eye on. That will give us the hope that we're actually coming out of this, that we've reached a bottom and are going toward a newer high level. Now just zooming in on the 4 hour, just to kind of get a little bit more clarity what's going on. Same thing as what I said, we are getting ready to do this retest. The thing to be aware of, that if it does break back into this pattern, then you might possibly be looking at more downward action. If it does break below this point right here, about 28.325, if it breaks below this trend line, and actually I would just be on the safe side just to extend it down a little bit lower to a few more touches, which kind of lines us up with this red line right here. If we go below that, yeah, expect a bigger move to the bottom. All right, so just to go over a little bit of information about falling wedges. Now, these patterns usually break out somewhere around 70 to 75% of the way into the triangle. Everything seems to be playing up to speed for this pattern at the moment. Now, if you'll see, the trend breaks out 68% of the time to the upside. This is where the statistics come from that you hear about these patterns. Thomas Bukowski, the pattern site, he has tons of books. He's the man who actually developed these statistics through his studies of these patterns and how they played in the markets for the last 30 years. But what we want to be careful of, and what I mentioned earlier, is the possibility of it coming back inside the parameters of this pattern like it did right here. And then it can break to the downside before taking a leg up and just stop everybody out. A game they like to play a lot. The statistic that I really wanted to show you right now was this throwback or pullback rate. 62%. And what that means, when they break out of the pattern here and go up, it has a 62% chance to come back to retest that line. And that's simply what I think we're doing at the moment. If you're asking what's going on over the next few weeks, basically at the top of this area, down even to as far as this wick right here, this is our zone. We are very likely over the next month and a half to trade up and down within this zone until about the end of June, about mid-July. That's when we can see a possibility from what the charts are telling me at the moment with the indicators and price action. It's going to be a little while before we actually start making a bigger move up toward 33,000. I hope I'm wrong. That would be great if I am. But right now, that's what it's realistically telling me. We are looking over this weekend and the coming weeks to come down and retest and then just gradually play in these areas, working our way up. That's what I've got for you. Hope it gives you a little bit more insight. There's a lot of conflicting ideas out there. We're going to the moon. Oh gosh, we're going down. Anytime Bitcoin goes up a few percent, everybody's on board for it to go to all-time highs. Every time that it comes down a little bit, everybody's thinking it's going to zero, going to 10,000. We're just not there. We're just kind of in a zone right now. The best thing that I can advise you to do, which is not financial advice, but just wise advice in general, dollar cost average. Buy a little bit every week, every day, whatever you can afford, even if it's just $25, $100, whatever. Do this on a routine basis. Do this when we have big drops. And that's a good way to have your foot in the door on Bitcoin if it does take off. And if it does continue to go down further, as you buy lower lows, when we have substantial drops, say if it every 20% drop, make a buy of Bitcoin. In the end, you're going to come out all right. If you're trying to trade right now, you have to pay close attention. Get in and do small scalps and day trades rather than trying to establish long-term holds at the moment. We just don't know what the market's going to do. That's what I got for you. Until next time, I'm Lane, your Crypto Road Dog, signing off. Road Dog Crypto.